Hi, Warriors. Today's going to be a great day. It always is. Anytime I have my trading warrior brother Henrik with us, he's a head of macroeconomist at Swiss Block, and great to see you again, Henrik. I think it was about 3, 4 months ago since we last did this.
Yeah, been too long again, but nice to be coming on, regularly here.
All right. Well, a lot has transpired. If I just rewind the clock, I remember. Oh, and a belated happy birthday to you.
Thank
I
you,
know
thank
I
you. Yeah,
I know you just had one. So that's
yeah.
when we talked because you were, inviting people to come and
Oh yeah, yeah, yeah. So, but
celebrate.
yeah, we
Yeah.
will, we will. It'll be summer, but let's see how it
Uh,
goes. We need to.
uh, okay. So here's the
Yeah,
ironic thing about that last interview. I
yeah.
started it off with saying, Henrik, sometimes your original thoughts are the best, and you for at least 12 months, we're talking about 6,100 being a real important area in the S&P. It was your long-term target, and then it was adjusted. So that day I said, well, do you want to change it back to 6,100? And you said no, of course,
Mhm.
because you were looking for continued blow off. Instead, we had a detour, like a false breakout. And I also asked you, because we thought we'd be blowing off into this time frame, but I said, where do you think the S&P will be on your
Yeah,
birthday? Do you remember that?
probably been too optimistic back then, huh?
You were calling for 5,400.
Was I?
But
Oh wow.
yeah,
Okay.
I mean, I'm, 50, pretty close. It's just that
What
it
was it?
had,
55, was it?
uh, I think it may have been 55. 55 was the low. I think you
56.
said
Yeah, yeah,
54.
yeah.
So the scenario unfolded without the blow off. So let's call this detour. Is that the way you're
Hmm.
looking at it? Like the melt up hit an iceberg, and is this 10% enough? And this is an important low we put in a week and a half ago.
Yeah, I think it's an important low. And let me just be clear here. It may sound like I was very close to that target and I was right on it, but I actually thought it was because we were going lower at that point. I have to say that I retraced on that in terms of that's. I would say now that we still will go higher. We will have a new real blow off top. We're simply not there yet because we don't see the economy roll over. So I think we hit that. Or we got down to this low here last week or whenever it was, and I think it's an important low, and I think we're gonna have a V-shaped kind of recovery from here, and
Okay.
it'll be rather fast.
Okay.
Doesn't look like that today. I can see that now. It seems like we're down a bit here today, but I think we are on that path because we're simply not in an economy that is rolling over at this point. And if you look at across the world, also you look at indices in Germany, you look at emerging markets and so on, you'll actually see that they have been doing quite well into just recently. And it would be quite of strange to see that the Nasdaq topped out, let's say in December as it did. And then you would see that the DAX was going on until March to put in its new high. And also the Swedish index was in an all-time high just the other day. Not what we
Okay.
should expect. And
So that's
sometimes when things
something,
are not as we should, yeah.
yeah, that's something I want to discuss because I remember being, bearish a dollar and also looking for a break in the market that it didn't line up with the correlation because
Yeah.
weak dollar is risk on. It has been for a long time.
Yeah.
And I want to ask you if you think that regime has changed because what happened was capital outflows, repatriation, the dollar went down and the market went down. We actually said, China, we don't want your money, and their big sponsorship of NASDAQ stocks. If you overlay the dollar over the Qs, they were in lockstep all the way down.
Mm,
And it's actually
mm.
taken a little dollar stability for the markets to bounce. Has
Rally.
has
Yeah.
is the dollar a weak dollar no longer risk off, Henrik?
I don't think we're there.
Risk on, I mean.
Risk on. Yeah, I gotcha. I gotcha. Yeah, no, I don't think we're there. I think you're actually seeing that the dollar started to decline. Then we don't have 100% correlation with things. So I don't think
Yeah.
it's like one day when we see the dollar's weakening, then you'll have a risk on immediately. I think you're starting to see, okay, now the dollar has been weakening for a little while, then you can see the risk on starting to come back in again. So I don't think we are in that opposite environment. It may sometimes look like that we have those kind of correlations, but when we then zoom out and go into the bigger perspective again, and after the event has been, or after the time has passed, you will actually see that we're not seeing that. So I think we were seeing the dollar was kind of leading to the downside in terms of creating the environment for a bullish setup again, a risk on setup. And now we see here, this is the Nasdaq. As I can see, we're just heading the head into
We
the
yeah.
200 daily moving average here. I can see that's on your chart, right?
Yeah.
And it seems like we have a reaction. Again, that would be normal, and
Yeah.
now it'll be interesting to see if we push right through it. And
Yeah,
I
well,
would expect we do.
maybe this is just wave one, and
Yeah,
we get a
yeah, it
pullback,
can still be.
and then we go again.
Yeah, exactly. This can actually be a very small one, a smaller, minor wave one that is one and two we're experiencing here. But I think it's normal not to see the 200 daily moving average just getting taken immediately. So let's see what happens today, tomorrow, if we can push through there. I think you have a nice also Fibonacci retracement there. And the level is really about the 2150 that you have up there, the 61.8 Fibonacci retracement.
Yeah.
I think that is an interesting area because this is where if it can push through the 200 daily now, which I think it will, and then come up there, and then we have the green line, which is your 50 daily moving average.
Right.
Yeah, it is. It seems like
It
that.
is.
Well, then I think you'll also hitting the 61.8 Fibonacci level at that point. And that will be the test. That will be the
Okay.
test whether I'm wrong, whether if we can push through that or it does not. That's around the neckline of the topping area that you have. I don't know if you can
Yeah.
see that.
And it's a similar situation at 5920 on the
Correct.
S&P. See how many times we tested
Yes.
this level, and once we finally gave it up, acceleration
It,
happened. And that's at
correct.
61.8 with a moving average and a trend line. Massive
Yes.
confluence at 5920.
Exactly. And that is the point. That is what we need to take out. I still say that is we will do that. And my target I have to give it again. I mean,
Okay.
and people say now, Henrik, you're changing your target all the time, but I'm actually doing it while we are down. So I hope people will follow that. And I do it
Is
because
it
of
in the
Fibonacci
sevens?
extension
Let me
levels.
guess. Is it in the 7,000s now?
Not entirely yet. I think it's around 60, 68, 67, 6,800. I think that's there's the target there.
Okay. All right.
So we need to see, as you said, the that level there, the neckline area that I like to call it for both
Yeah.
the Nasdaq and the S&P to get taken out again. And for obviously we need to take the 200 out, the 50 also, and then some consolidation and a push through there. If that is taken, then we see new all-time highs, and then I think we go to 6,800 on the S&P.
Okay. What's going to lead it? Do you think it's going to be Mag 7's leading it, or different sectors in the market are going to lead it? Will the Russell, which people have been hoping for, a turn in the Russell, I don't see it yet. Here's your daily. You have a confirmed low, price and momentum confirmed.
Yeah.
I don't see it yet for Russell. So would you be buying, accumulating Russell for the biggest bang for your buck to the upside? Or, actually some of the leadership has been commodity related stocks, like the
Mm,
miners have
mm,
been on fire. Has there been
mm.
enough to the upside in the miners to change your view on uh, maybe buying the next pullback in metals? Or that's still the same?
No, not yet, not yet. I think still what we will see that. So first of all, it's asking, answering the Russell part. I think still that if my target on the Dixie is going to get hit on the to the downside on around 96, 97, you will see that the Russell will do well. And I think also you'll see tech stocks doing quite well here. And I think the Max 7, they looked like they had taken the beating, and they were done. But I actually think we're going to go higher on that. So I think we have a massive move coming in there. I think we're gonna see there is the FANG index, which
Yeah.
I follow, and I think we are looking at another, yeah, just hold on here, 22% higher levels coming on the FANG index. And that is exactly not what the market is expecting at this point. I
No,
mean,
it
everybody
isn't.
seems to be thinking that the market is now, cooked and will be rolling over, and the tariffs and all that. What I think you'll see is that you have this wall of worry now, which is based on things that will have an impact on the economy, but that's not the same as the market is taking it in immediately. And people have a tendency to think that because we hear something in the news or elsewhere in the within politics, that things will then immediately turn out in the market. Sometimes there will be a correlation between that, and sometimes, but really these are bigger things, structural things, and they will take time to come through. So what the real development may turn out to be is that when the Fed now comes in and do what they did last week, talking about, not
Yeah.
just talking,
Ending
but actually
QE,
cutting, yeah,
QT.
cutting first, cutting to QT, or tapering QT. I think that is a massive liquidity component that a lot of people seem to overlook, and that will propel markets for as long as the economy is not really rolling over. And we can just look to the yields. But the moment that the economy rolls over, you'll see 2-year yields coming down strongly. We have not seen that. We will see that the initial claims should start to rise quickly. We don't see that yet. So there I think there is another round in the economy. It doesn't need to take long. And some of these bull markets that goes into the final phase is actually the strongest. We all know about the
Right.
Eiffel Tower kind of spikes that we can see, and I think that is what we potentially can go. We'll be seeing, and I'm just taking it. Just if you look at the DAX, you actually seen something of a Eiffel Tower kind of development, even though the German economy has had, quarter on quarter negative growth for a long, long time. So that you cannot see these things developing, even though there are some bad news out there. That's just not how the markets work. So I think the liquidity will come in now with the Fed also. And yeah, if you go on a weekly chart there, Coach, you can actually see how strong it's been moving.
Yeah. And that's, I think that these markets are going to continue to outperform. Don't you? I really think I've heard from some pretty smart guys that the shift away from U.S. exceptionalism and all the money that poured into the U.S. over the past few years, um, that this shift into um, other markets, Western Europe, Asia, is something
Yeah,
that happens every 20 years. It's not like something cyclical that could happen every 6 months. They're saying
but
it's a seven.
try go back to the daily chart, and look at that. If you look at, first of all, we can see how fast it's been going. It's been seen from
Yeah,
17,000 in August 5th up to
right.
23,000 in at this point, right? But if you go on the daily chart and then look at the divergence you got into this
Yeah,
top here.
I wouldn't buy this market.
No, no, I would not buy this. I and honestly, I think I have to say, I think this whole narrative that you just talked about there, I don't believe in
It's
that.
going to be
I
unwound.
think there is I think there is something to it, but it's not gonna be good. I mean, I would not put my money into Europe if we're starting to hit the wall in the US.
The
So
euro, well, when we hit the wall, but in the meantime, the euro is the cleanest dirty shirt in the neighborhood. It used to be the dollar, right?
yeah, but I know Europe as
So
well, and I
okay,
can tell you if we get problems here, I mean, there are so big differences between, let's say, Greece and Europe and Germany, and if you
okay,
have two very different economies in the same exchange rate rail, then it can cause a problem. That's why the euro is not as strong as the dollar. I would like it to, but it's not. So I think, if you look at I expect the euro still to rise at this point. Remember that I'm saying that we're going to see a strong move in the euro,
yeah.
but that's a
You're
counter
looking for, yeah,
bounce.
yeah.
Yeah,
So you're looking for Henrik's target, and for those of you, I'm sure Henrik shares it with you, but he's got a
oh, that's
95
fine.
target, and it's based upon equality between the break that
Yeah,
we had here and the high here, and equality takes it down there to 96. And then you're
exactly.
expecting that will be the peak in the market,
Yes.
and then you have to get long dollars for banking problems. And I want to ask you something. I know I'm early and
Mhm.
probably maybe even wrong, but sometimes you just have to follow your training. So,
Yeah.
my training is when you have a big decline, pretty vicious decline, like you had in B of A, okay? It broke
Yeah.
20% in 5 days, okay?
Yeah.
So now, now we're trying to recover, and I look at it here, and we got a 50% retracement. B of A was my choice because they have the biggest book of long duration. They could have the problems if there's a problem with rates. So
Mhm.
B of A, uh, will the banks lead it? They should be really behind. This should be about the plumbing beginning to leak. Um,
I think they already are.
okay.
And I think
And
if you look at the BNA again on a weekly chart here, you will actually see that everything, and this is coming out on the very big picture,
yeah,
everything you've seen since 2008 has been nothing more than a bounce in BNA. So if you look at this chart here,
yeah,
you'll actually see that if you go way long way back, all the way back to 2008, you'll actually see that things have been bouncing over that time, but not really been moving up like a strong bull market. Um,
yeah.
that does not.
2009. Well,
Yeah,
2009.
nine. If you go,
It was
yeah,
$4
yeah, but can you go further back?
in 2009. Sure.
Yeah, I tried to, but you need to get 2007 and 8 with them. But anyway, but the whole move that you've seen that for that this long time here, there you go. So you had the strong decline in the financial crisis, and in the bigger picture here, it seems like what you've seen ever since then, in my theoretical world, has been a bounce where we have been kicking the can. We've seen then a very strong, late the move up, but I
Look
think
at
we're
the
actually, if you look
divergence.
exactly the monthly divergence all the way back to 2018 there. This is
Yeah.
a massive, massive pattern that can only tell us that we potentially have a situation where the decline in 2009, 8 and 9 was the first leg down in an A wave. Then you've seen a B wave developing with a
Irregular
massive
B,
divergence.
and then we get
This is a B.
1.618 of this from here.
Yeah, you can. This is where B waves, it can do what it's called an extended flat, but that still brings us down to that the potential could see a decline down to below, let's say below 20 and
Yeah.
also below 10
Wow.
dollars here.
Yeah.
So this is probably why Mr. Buffett has been selling out of his shares in Bank of America. I can see this is a massive, massive setup for a very strong decline. And people don't believe in these divergences, and they say what should happen. Well, the real estate market in the U.S. and in many places around the
It's
world is
rolled
not good.
over. It's rolled over.
Exactly. And if you have that, and you don't, and right now you see that there are fewer, existing homes sold with the amount of people that you have now in the population in the U.S. It's just in the gutter, and people, no mortgage applications, no nothing. It's not something, nothing is happening, and that is a problem for the banks because that's on their balance sheet. So if that starts to happen, then is you got another financial crisis coming. So I'm actually saying it. You're gonna get another. That's why I said it. It's gonna be really bad when it's starting to unfold because this time the bubble is so much bigger, and a bank like this is going to feel it really badly, as I see it.
Okay, so just time-wise, I was thinking if this is a low that perhaps this melt up lasts into late summer, like August in 1987 was the high of the move, and then we broke in August and then came back with a failing rally in October.
Yeah.
Remember that?
Um,
Something like that?
yeah, maybe. I mean, I think the decline here will be if this is going to be like what I'm expecting, then you're going to see, something of a strong decline that will last for some time also, because normally you will see that the C wave has a more distinct kind of structure to it. So it can last more. And again, we need to see that developing. But the initial question on this that you say whether the banks are leading, I think we have seen the top in the Bank of America. I think we potentially have seen the top in what is called the XLF index also, which is the
Yeah,
financial
that's
sector of
right.
the US.
Yeah, it's the same thing.
Yeah.
This one
And
look, this one's a little stronger. That's why I went with B of A. And it
yeah,
might eke out, if you're right about 6,800, I think this one will eke out a new high. See, you have, or it's putting in a right shoulder. But if we're going to
exactly.
6,800, I don't know. I think they should be
But
able to
again,
put in a
look at the
3.
divergence into that top you had there.
Yeah.
So I think there is a chance that this XLF bounce we have right again, you can see that we have a decline now in the XLF without having a major top in the stock market. But this we may only be in the bounce of this first decline. It can also be that we take a new high. Excuse me. I got something.
Okay.
I'm getting these smoothies here from my girlfriend, and there is a lot of berries in it, so I almost choked on one of those. So
Is she mad at
anyway,
you?
no,
Not trying
no,
to
I
get
think no,
rid of you. Not trying to
yeah,
get rid of you or anything. So do you think Nvidia is synonymous with like B of A? This was a leadership. It hasn't done much on this recovery rally. This is this week with the S&P up 2%. This looks kind of heavy to me. We've had a couple false breakdowns, but this also was a leader. I mean, it's a poster child for the bull market that we had been in, right?
sure, but it's not always we see that it's the same one that leads into the
Gutter.
at the very top of it. It's like also when you see look at altcoins actually having the final go into the after Bitcoin has been topping out. So it doesn't need, but I actually think there's a good chance that this is only a correction also still in Nvidia, and I could see Nvidia also going to new highs here. So I think
Okay.
I think there's another move, all-time highs coming to Nvidia. I think we could see 170 on Nvidia before we see the top there.
Okay. All right. And where's your head at on Bitcoin? We got close to your target. This looks like, consolidation. Maybe we get one
Hmm.
more stab down towards under 75, and that's it. Back up the truck.
Yeah, I think if you look at it also, if you this is a daily chart and you look at the two bottoms we had on the before March, and then you actually have a divergence there
Yeah, right
from
here.
that point and then to this, and then compared to the RSI. You'll
Yeah,
see that the RSI is higher there. That's normally that can be a good suggestion that that could have been the bottom. It's
yeah.
not necessarily the bottom, but and we need to see more. But right now we have crossed above the 280 moving average on it. So I can see a situation where we can where you could drop to 72, 73.
There it
But
is.
yeah, but I yes, but
Sometimes you
I
get three,
exactly. Oh, you can get
three
three.
is a number
Yeah,
of completion. So,
correct. But
okay.
that's why I'm saying we are still in the woods there until we see 93, 95 taken out. If we see that, then we are in the bull phase now. And if we move below the 280 moving average again, then from now, then I think the risk is that we got to see the 72, 73. So I think there's we're it's indecisive here. However, if you then compare it again to what you see in the Nasdaq and you look at the S&P, then I think those have started to move up in that new bull phase, at least as
So
I see
they
it. And
may
that means
lead
that
they may lead
exactly,
Bitcoin this time.
exactly. That's why I'm leaning to the bullish case here on Bitcoin as well.
Okay. Um, I think we covered everything that people need to know about when it comes to the markets. Takeaway looking for 95, 96 in the Dixie. Um, I actually think a gold top is setting up here, Henrik.
Yeah, yeah,
We're getting, the daily's still a little bit too much mo, but if we get one more high, I've been waiting for the 4 hour to diverge under the 70 reading. And
yeah,
see, these were too high, 80, 80.
yeah,
This was
yeah,
really the first divergence, but it was still over
yeah,
70. If we blow
yeah,
now over these highs, I don't think
yeah.
we'll take out 70 on the
No,
RSI. And I
but
favor it that short over silver because I think the gold silver ratio with the market, silver's going to get, if you're right about the market, a blow off, silver's going to get the bigger play as the
yeah,
industrial. So
yeah,
I'm bearish a gold silver ratio. I Do
yeah.
you have any
I think
comment on
gold.
metals here?
Yeah, sure. So I think gold, I mean, I have up to 70, sorry, 30, 32-ish. I think we can
Oh
see
yeah,
this move, last move can actually
3250.
take to
Yeah,
maybe
yeah.
as high as that, maybe, but around that level, not maybe not entirely that all that to 3250, but around that level. I think it's 3180 as to be, but we know it's
Okay.
in the areas of that. But I think we can see that into the final high of this. I know everybody's talking about it, about gold, but if you look at the silver, for instance, and you look at the weekly chart, you'll see massive
As I say,
divergence. First on a longer time scale and also on a shorter time scale, and that normally tells us that it's a severe top or major top we're coming into, right at the point where everybody starts to become so bullish. The precious metals, right? So I think
how about
we'll
this
need to
for a
see.
how about this
Yeah,
for even
copper.
being a better contrarian trade? Because I say copper is about construction and gold is about destruction. So if we're
Yeah,
looking for
yeah,
a bust, people may
yeah,
still gravitate towards gold in a panic or
yeah.
a dollar hedge, but this copper move, people are so bullish.
Extreme.
Here's your
Yeah.
weekly.
Yeah, but that's also why, I mean, you look for, Dr. Copper to see where we are with
Yeah,
the economy, because that's really about construction, as you say.
yeah.
And if we
And
were at a
tariffs.
situation
People are
and
front
tariffs, yeah, yeah,
loading their buying. They're pulling forward a
sure,
lot of demand right now.
correct,
Isn't that
correct,
what's
yeah,
going
correct.
on? And
That is absolutely what's going on. But still, it will be difficult to see that the Nasdaq topping out in December, and then you will have a recession without, the yields
copper.
declining as they should, and copper spiking up like this. So the
Okay.
people calling for a major top in the market really this doesn't add up all of these things together if you look at it like that.
And I know that you're constructive TLT. I mean, I could see how they're basing or there's a bottom, but I look at a chart like this and I don't, I don't see anything bullish about it.
Well, I mean, it seems like momentum is moving up strong from the bottom we had all
Yeah,
the way back in and that
October.
that is a bigger thing. I mean, that is a bigger thing. We when you have a divergence at that size, it's not just going to play out with a small bounce like what we have seen here. So
Okay.
I still think that, and also because when the economy is rolling over and you start to see the deterioration in the labor market as well, that is normally the moment when we start to see the short-term yields and also longer-term yields. Then later on will start to decline, and that's bullish to TLT. So I think we need to see that labor market deterioration, and I think that is coming.
Okay. So in this recent bout, the 10% correction, there was flow to bonds. If we're going to have
Yeah,
a blow off, that's going to be the question. Are we going to
yeah.
have a bull market in bonds while the S&Ps are blowing off? Or are we going to have a bull market in bonds because people are hiding out from stocks?
That is actually a very good question. So if you look at an SPX versus TLT ratio, so if you put that up, actually, you can see that it actually seems like that ratio has topped out. It may be that it bounces, so that we will have a risk on environment, even though we may have shifted into a risk off environment, if that makes sense. So you have a smaller cycle there. But I could see a situation where we see both the SPX and TLT
Going up
rallying quite
together.
strongly together. Yeah,
Yeah.
we can see that for a certain amount of time, not a long time, and they will be in a transformational period. But I can see that happening.
Okay. So 6 to 800 is on the record. Is that the number?
6,800 on the S and yes, that's the number that I see. Yeah, that is, I think, is like my target at this point.
And that's a wave count because, I say to people, if you can add and subtract, multiply and divide, that you could trade. So all you have to
Mhm.
do is 6,100 to 56, 500 and tack that on above the high. And you
Yeah,
come very close to Henrik, who had to do somersaults and cartwheel to come up with an Elliott fib target. You can
yeah.
do the same thing by adding and subtracting sometimes, buddy.
Exactly, exactly.
For an old school guy like me, that I remember flashcards. Okay, you probably never heard of them, right? That's how
No,
we learned math, right?
I haven't. I was just saying, what was that?
Yeah, yeah,
Okay, yeah,
flashcards.
yeah.
Yeah, that was
Mhm.
when I had, instead of a screen, I would watch a market. A little tape would run underneath
Yeah,
the glass.
yeah,
I have that when I
yeah,
was a tape reader. Uh,
yeah.
it's a blast having you on, man. And
Thank you. Yeah, always,
Yeah,
and also it's nice to be able to talk some technical stuff here instead of, just a bigger picture all the time. So it's
yeah,
nice.
yeah. So I mean, I have a pretty concise view, and I was curious what your thoughts were after
Yeah.
this. And God, we have a lot of great markets to trade this year. We have
Oh
major
yeah.
stuff. We got a
Oh
major
yeah.
blow off and then a major top in one
Yeah.
year. That,
Yeah.
that's why I say to people, let's have a good decade this year.
So good decade. Yeah. Because they can be more difficult. It may probably be more difficult the coming years.
Yeah,
That's could be
yeah,
that definitely the case.
yeah. So
But I
that,
like your chart there also. You can see how the negative divergence you have into it on a weekly basis.
yeah,
And I like that if you have actually, I have if the three things that I'm looking at. If you look at the business cycle indicators that I have and they roll over and they tell me that there is a recession coming, and you look at the stock market is starting to put in weekly divergence, like what we have here, and you see the 2 year yield plummeting really fast, not just what we have seen, not a slow decline, but starting to plummet, then
right.
you're close. Then you're close to the top, in not just the top in the stock market, but also to the recession setting in. And we have two of those components now. We just need to see the yields as well. And I think in that environment, we can still see one more high coming to the stock market as you have here, the S&P SPX, and they're actually putting in that blow off top, even though your RSI is not going to go to above 60 here.
Yeah, it
And
won't
and that I
confirm
think
it
is the
up there. Yeah, it won't confirm it.
yeah, yeah.
Okay. All right.
So
So now Henrik has told you the market tells to pay attention to know that things are becoming imminent. Really appreciate you educating our community, Henrik, and talking to you. I hope that money just flows like a tsunami over you and all the people you work with. Okay, we'll
oh,
call it
likewise, and to everybody
a
here on the show,
cash
obviously.
tsunami
Yeah.
for Henrik Zeberg. All right, buddy.
Sounds good.
Adios. My
Thank you.
trading warrior, Henrik Zeberg. Everyone follow him on X at Henrik Zeberg. Um, Stay in touch with these counts. This could be the most important year in market history in generations. So we're lucky to be here. Take it easy.